So yesterday, what was the last topic? Yes. Aisha? Kalyan?
Ma'am, yesterday I was not attend the class.
Yesterday you are not there. Yes,
Yes,
what
ma'am.
about Kalyan?
I forgot, ma'am. I have don't material.
Yes.
I think it is.
Yes, yesterday we have finished.
Am I? Yes, ma'am. Today we start advantages.
You all can hear my voice.
It is breaking, ma'am. Voice.
Voice is breaking.
Mm.
It's perfectly there, Dema. Yeah. Can I start my class?
Yes, ma'am. Good.
Okay.
Yes, ma'am.
Yesterday we have finished with the advantages. I'll go with this. Yesterday I have given the your whatever the contents, introduction of the financial accounting, meaning and the definition, and next is the functions of the financial accounting, bookkeeping versus the accounting, how it has the accounting has evolved, from which century it is, and the advantages of financial accounting, and limitations of the financial accounting. So till here we have finished yesterday. Now we are going with the branches of accounting. In this branches of accounting, in the accounting, we have many accounts. So in this accounting, we have a branches of accounting, that is a financial accounting, management accounting, cost accounting, and human resources accounting, inflation accounting, responsibility accounting, social accounting. So these all are the branches of accounting. Means from accounting, it has a many branches. How one tree, it has a plant, that is apple plant. Oh, sorry, a tree, it has a many branches. So in this, we are also in this account also, we are dealing with the many branches. First, we'll see what is the financial account. Here specifically, here financial accounting, it is complete, it is depends upon a monetary transaction. Monetary transaction means what? It is a money transaction. Ascertains that profit and losses. So what the profit we are getting yearly and what the losses we are getting, at all, everything will be in the finance. That is, the finance is nothing but it is a monetary support. That is a transactions. And in this also, it is a transaction every time it will be taking for 1 year. It will not for more than 1 year. Means that is a January to December or April to March. So that is always, this is a ascertain always profit and losses for the specific accounting period. That is usually 1 year. So if you want to see the profits, it means every 1 year only you are paying the transaction. That is, you are paying the income tax to the government. Means that is in that year, how much the profit you have got, how much you have invested, everything will be seen. That is only in the usually 1 year. At present, the financial position of the business on a given date means January 1st, you started your business, your production you have started, you have made the sales. So 31st December, by 31st December, what is the position of your business? That everything will be in the financial accounting. Is it clear? So in this trading accounting, profit and loss account, and the balance sheet, we will be having in the financial accounting. Next, we come with the management accounting. Management accounting, here it is complete, it is relevant information. Relevant means related related information will be given to the management. Whatever the functions they are discharging and what sort of the business they are making, that is a management accounting. It is an application. Application means in this management accounting, that is professional information where you have to apply your plans, the policies, everything that will be made in this. That is accounting is the application of the professional information. Profession, managers, the head of the departments, what are the policies they'll be taking, how they have to implement, who means to whom it has to be given, and to whom they have to assist, and what type of operations, decision making, everything in the management accounting. But in the financial accounting is complete with the transaction of the monetary transaction. But here it is a professional information. Is it clear? And next is a cost accounting. Cost accounting, it is dealing with the science. That is a cost, that is a classification. You can see here the screen?
Yes, ma'am.
Okay. So here in this process of the collection of your cost data, whatever the data you are getting, and what is the classification, what is the computation of the cost, and what the cost of production means. If you want to make the end production of one product, first you have to estimate what the cost should be for production. And even it is a cost techniques should be used in a business. And it is also a science which deals with the ascertainment of cost of producing a product and rendering the services. Means simultaneously you are producing the product and you are giving the service to the customers. Is it clear? That is a cost accounting. Yes, Kalyan?
Ma'am. Yeah,
Clear?
Clear, ma'am.
Okay. Next accounting is a human resource accounting. Human resource accounting, that is a information technology we have. This is a complete, it is a growing the information about the process of identification. What the process you have to, where you have to make the valuable, those where you need it. Means HR. It is a present, that is a process that is identifying the human resources, where it is available in every firm. Each and every firm, there is a one separate department for HR, that is a human resource accounting. So the importance of this investment on human resources, that is IT, that is information technology sector, human resources accounting, where it is also essential branches of accounting, where you are gaining the wide popularity. Next, we are going with the inflation accounting. Inflation accounting is what? Where the process, where it is reflecting the price levels. When you are seeing the now example, we can make it. That is now the cost of 1 kg of the tomatoes. What now present? It is the inflation. That is
Yes,
1 kg of the tomatoes. What? It's the cost is
120
120. Previously, 10 rupees kg. That
Yes,
is the process where is reflecting the price levels. That is changes in the market. Where is the scarcity of the tomatoes, the demand and the cost will increase. It is must each and everywhere you have to. Will be in every kitchen they'll be using the tomatoes. So the cost where the changing the levels of the market. Inflation, it is also concerned with the regarding of the business transaction. What the business transaction they have to, where it is a consideration and the price level changes, where it is comes, and even it is also financial accounting fails to do the inflation. So this is also not applicable in the financial accounting, because financial accounting, they will be writing whether it is increases or decreases. It cannot be fail. It cannot be applied in the financial accounting. There is an inflation where the changes in the market. Next is a responsibility accounting. Responsibility accounting means nothing but the performance, what the performance you are getting, and determination for future. Now, if you're making the good performance, you will be getting the good performance in the future. That is determination of your future and the for future courses for the action regarding of your planning. If your planning is very good, then the performance also good. When the performance is good, you can determine for your future. Is it clear?
Yes, ma'am.
Yes,
Okay.
ma'am.
Then next is a social risk accounting. Social accounting, it is a process where it is a communicating the social. And social means it is a complete, it is about the society. And it's understood. That is a environmental effect in an organization. If one department fails to do the work, it is complete effects to the department. That is a complete company. So there is a particular interest group of with the society in the large. Now we'll be seeing that who are the user of accounting information. That is, who are the user for accounting. First, we can see the owner. Owner, where he is investing the fund, the capital in an organization, for the organization, and whether the funds are being properly used or not. The manager, the owner has to say when he is investing the money, that money is properly used or not. It is correct form of. So there is also need for the information to know for the profitable. Why he has to check each and every time whether if I'm implementing this properly in the proper way, then I'll be getting the profit or not. And that is a financial position. There is a invested their funds. And next is a management. Management, it is all an art. It is an art. Everyone cannot do it. That is an art of getting things done to others. Means I'm the manager, I'm the owner. So I'll be employing some of the people, but I'll not do the work. I'll be making my work to be done by others. Is it clear? So that is the management should be ensured that the subordinates must work properly. I'm the leader of the one group. So when I be making in a correct way, if I make the people should be working in a means each and everyone given the responsibility. That is, I'm the subordinate. So I'm the owner, I'm the manager when I'm subordinates working under me. So if I'm regularly checking and regularly asking the things, whatever they've done, then the business will run in a proper way. And next is accounting information. It is also help with the managers where the appraising, that is the performance of the subordinates. Next is a creditor. Creditor means what? Who supply the goods on credit. Is it clear? These all are the users in the accounting. That is a giving.
Ma'am, one doubt, ma'am.
Yes, Kalyan.
Previously, manage accounting and here manage account management here. What is the difference between user accounting and previous managing accounting?
Where ma?
In branches, managing a management account and management user of accounting in the management subhead is there. What is the difference of management accounting and management?
Here, management accounting, this is a very concerned with the relevant information. When they are getting the relevant information of the market to the management, then they can discharge their functions in a proper way.
Okay.
So once I'm investing the money, that is a financial accounting. So I'm getting the information from the outside for concern of my business, then it is a management accounting.
Okay.
And cost accounting, I'm planned to produce one product. So I have to see that what is the cost, what are the various methods I have to use in the business. These all comes under the cost accounting.
Okay.
1 minute, ma.
Okay.
Sir, chala sa pen then joining. Okay. Understood now?
Yes, ma'am.
Okay. And HR means HR, how it is concerned with this all accounting. HR is the one sector where which type of a person should be appointed in the company. Whether he must be trained or concerned qualification, they have to. HR, that is staffing. Means for correct job, appointing the correct person. Understood?
Yes, ma'am.
And next is the inflation accounting. In time to time, you have to check whether that is what changes in the market you have to see. Okay. And next is a social accounting, where it is complete about the society and the environmental effect in a organization. Now it's clear, Kalyan?
Yes, ma'am.
So now we are talking about the users of a accounting information. So this is the accounting information, that is the owner, then the management, then the creditor. Creditor, where they supply the goods on a credit. They'll not take any money. Just they'll give the goods and afterwards they'll collect the money. So this is a creditor, that is a goods on a credit, or the bankers or the lenders of a money, and that they want to know the financial position of a concern before loan are granting the credit. So your financial position also they must know. If suppose I want to start a business, I need a money. So I'll be seeing my position, whether I can be affordable or not. Then I'll be going for the loan, giving loan for the granting the credit. Is it clear?
Clear, ma'am.
Next is the employees. These all are employees also. They are the one of the people, they'll be employed in the financial. Employees are interested in the financial position of a concern. They serve the particularly for when the payment of the bonus depends upon the size of. So employees also, they'll be also the user of the accounting. So if company is getting the good profits, then they will be dependent upon the size of the profit. So if they're getting the more amount, they'll see how much the amount, extra amount of like a bonus or the better condition of the work and the wages rising, demand for the wages rising. If you are continuously getting the profits, means what you'll do? You will ask for the raising of the wages. Is it clear?
Yes, ma'am.
The next is a government. Government is also one of the person where it is interested in the accounting information because it wants to earning or the sale of a particular period. So that is their purpose of a taxation. Next is the consumers. Consumers also they need for the accounting information, that is establishing the good accounting control so that cost of production may be reduced result. So these all are the people where they are fixed the reasonable prices. When you are going to the market, if the new product is launched, then you'll be making, suppose if you are the producing the product, so you will be getting the information from the market, and by that you will be fixing the reasonable price so that the consumers are not exploited. Is it clear? If you are the owner, if you are produce any product, then you don't want to make your customer to the other people. So reasonable and the quality one you will be giving to your customer. Is it clear?
Okay.
Yes, ma'am.
Is it clear? Only Kalyani is giving me the answer.
Yes, ma'am.
Now Aisha has come out. Now you ask me the doubts.
My side clear, ma'am. I answered already.
Yes. Tell me, ma. Someone is telling me, asking me something.
No, go ahead.
Okay. Now we have the double entry system, that is the accounting concept. In this, first is a business entity concept. Business entity means where the separate entity will be there, that the owner himself has to make the distinct, that is a transaction, that is true picture should be arrived, that is mixed up with the personal transaction of the proprietor. So it should not taken, if suppose I am the proprietor, I am using the business. So at the time there you will be making the mix up of the personal transaction, that is a drawings. You will be taking the money from the business. Okay. Now we have the business entity concept, that is the equation. It is the capital plus liability is equal to assets. Is it clear?
Yes, ma'am.
Next is a going concern concept. Going concern concept, it is according to this concept, that is a business is assumed, that is a indefinite period of time. Means you will be making your transaction, you are recording your transaction in the book, that is 1 year. After 1 year, you are not closing your business. Again, you will be going with the new. Means that is a firm or a business is said to be going concern. You will not be stop your business. That is neither intention, that is a necessity to wind up your affairs. Is it clear? Periodicity means what? That is a periodicity of the concept. Periodicity concept where it is a going concern means that is you will be make the performance of your evaluation, that is hence at the periodic intervals, that is usually every 12 months. You will be fix your time, that is for the 12 months. Any doubt?
No, ma'am.
Next is a money measure concept. Money measure concept is what? Whatever the transaction, whatever the business you will be making, that will be expressed only in the money, terms of a money only. For example, the punctuality, regularity, community, the employees have the positive deal on the business. So here, however, these are not measured. If you are coming punctuality, you are regularly coming, you are making the commitment to your employees, that you can measure it or express into the terms of money. You cannot say, I have come punctually to the company, so you must give me a more amount. Who are not coming regularly, you cannot say this. So this cannot be measured or expressed in the terms of money, or therefore they cannot be recorded. You cannot record it. That is complete separate register will be there for employees. Is it clear?
Yes, ma'am.
Now next is a cost concept. Cost concept means what? This cost concept, it is also called the historical concept. Means this is a concept where it is in from the olden times. These are the transaction where you are recorded in the books of account and its price. Is it clear? So simply you'll not write, I have sold the goods, I have purchased the goods. You will be writing the cost of the price also, where you are incurred. And this cost form, it is also basis on the subsequent accounting. So this is a cost accounting. It is very much advantage of bringing objective to the accounting. Is it clear?
Yes, ma'am.
But
Next is the
ma'am, I had one.
yes.
A cost concept present situation, how will we apply, ma'am?
Means
Any example for cost concept?
cost concept, it is a suppose I have purchased the goods.
Okay.
Purchase the goods. Just
Okay,
if I write only the purchase in my books, if I write I purchase the goods, I have sold the goods, I have returned the goods, then you must know how much the cost you have purchased, how much cost you will be returning, how much cost you have sold. Cost must be there, no. I have purchased the goods for rupees 500.
Okay.
Is it clear?
Yes, ma'am.
So then only you can make it out.
Okay.
Dual concept. Dual concept means two concepts. That is a debit and a credit.
Debit and credit. Okay.
Dual.
Yeah.
That is it is involved with the exchange of the values. That is another value will be received. This is the concept where it is a feature, that is a concept, that is dual. Dual aspects, that is a debit and the credit. And matching concept. And this is a necessity concept due to the assumption. Only you are assuming, that is going concern, means continuity, the periodicity, going concern concept. And periodicity means for a particular period. What is a particular period? 12 months. Is it clear? That is a 12 months it will be making. Now, accounting convention. We have a 4 convention. That is a convention of consistency, convention of convertism, convention of disclosure, convention of materiality. So these all are the 4, that is the accounting concepts. Clear?
Yes, ma'am.
Yes, ma'am.
Okay. And next, see here. Accounting classification. Classification of accounts. Just you see this picture. By seeing this chart, what can you understand?
Accounts are 3 types. I understand. Accounts are 3 types are there, ma'am. Real accounts and nominal and personal accounts. Personal accounts means it. I think person to person, ma'am. It is we deal with.
Accounts, it is classified into 2. One is impersonal, one is a personal. In impersonal, there is a real account and a nominal account. The personal account, it is complete, is related to a personal person. That is mine. I'm having the bank book. I'm having the account. That is my personal. A real account and nominal account. Now we'll see. Personal account are the accounts that are used to record the transaction related to individual person, firm, companies, and other organization. Are you getting? Example of such accounts, that is individual account, Mr. X. The accounts held by Modern Enterprises and Citibank, that is a individual, that is a personal. Okay. Impersonal are those do not related to person. वो person का इश नहीं होता.
Okay.
That is person, it is related to a particular person. But here impersonal, it is not at all recorded. That is, these are the accounts which are not at all related to a person. Is it clear?
Yes, ma'am.
So in this impersonal, there are two types. It is a real account, real account and a nominal account. What is a real account? You see, in real account exists, that is a end of an accounting period. For next accounting period, these accounts start with a non-zero balance. You'll be seeing some of the people, they having the account, say, how can I express this one? Real account. This is the end of accounting period. For the next accounting period, you will be having non-zero balance. Means whatever this year amount will be forwarded. So which will be carry forward from the previous accounting period. Is it clear? If I'm maintaining any accounts, by the end of the 31st December, I'll be finding some of the amount that is a closing carried down. See the examples? That is the real accounts. It is a machinery account, land account, furniture account, cash account, and accounts payable accounts. So these all are comes under the real account. Real account are listed in the balance sheet of the business. For this, they are sometimes referred to a balance sheet accounts. It's clear?
Yeah.
Nominal account. What do you mean by nominal account? Just you see.
Non-zero balance.
Tell me. So these are the nominal accounts where it is closed and end for the accounting period. What is accounting period? 12 months.
12 months, 1 year or 1 year.
For next accounting period, these accounts starts with the zero balance. Understood?
Yes, ma'am.
So nominal accounts typically cover the issues such as income gains, expenses and losses. Is it clear?
Yeah.
Now we'll see what are the principles of double entry. Double entry, it is a bookkeeping. It is a system of keeping the accounts, and which we have studied yesterday. That is twofold aspects for every transaction, whereby one account will be debited, the other account will be credited. You know, no? Receivers and the givers. There will be two people. That is a double entry. One gives me, the other one has to take. And now we have some of the simple rules of the account. Double entry should be fully understood and memorized. So now we'll see, for every credit entry in an account, there must be corresponding debit entry in another account. Now when I show the picture, then you'll be understand. For every debit entry, यहाँ पर क्या बोले? First में when one is the credit entry, the finally you will be writing the corresponding that is in a debit. When it is a debit account, the other will be corresponding credit account. And third one is, it must not be recorded in the two books. Sorry, must be recorded in two books. And one account is debited in account, in another account credit.
103, 104, 105. ఎవరికైనా ఐడియా ఉన్నదా? అసైన్మెంట్
ఏందమ్మా? Rules for generalizing. See here. See for the what is the rule for personal account? What is the rule for real account? What is the rule for nominal account? Now I'll ask you. Make it fast. See that and give me the example. Are you reading the?
Yes, ma'am. We're reading.
Just you go through because you have an idea. You know, if you did the CEC means you know this.
I think personal account is deals with person or farm company, company or farm company, ma'am. I think.
Yes. Yes, no, I showed here. No.
Yeah. Real account is
Your personal account I showed it is a personally it is related to a particular person, or it may be the firm, or it may be the company and other organizations.
Yeah.
Is it?
Yes. And
So,
real account.
Ah.
Real account deals with assets, ma'am. I think. Or any.
So here in this personal account, it shows the rule for recording for the personal account. The debit, the receiver means the benefit I'm getting of the benefit. Credit, the giver. So when I'm selling the good, now suppose I'm selling a one product to you. So I'm getting the benefit because I'm selling, you are giving me the money. I'm benefited with the cash. That is a commodity transaction. When I'm giving the product, you are happily taking, you are also benefited. Is it?
Yes, ma'am.
So according to this rule, the account of the person where giving the benefit for business, that is of the transaction, is to be debited. One should be debited, the other should be credited. The next is a rule for the recording for real account. Here what we in the personal, what we have made, receiver and the giver. But in the real, what comes in, what goes out. Debit, what comes in. Credit, what goes out. So according to this rule, when any item is received or comes into the business, it has debited. Received or comes, it should be debited. And item is paid or goes out of the business, it has to be credited. That is respective accounts. Next is the rule of recording for nominal account. This is a debit all expenses and losses, credit all incomes and gains. Is it clear? So when an expense is incurred or loss is suffered, debit the account of the expenses or the loss when it is a gain or the gain made. So it is a credit account, it is income or the gain where it is concerned. Yes?
Yes.
Yeah?
Yeah.
Yes, ma'am.
Now, see this application of the principles of double entry. Receiving account or receiver. Giving account or giver. DR means receiving account with the value it receives. Credit giving account with the value it gives out. The basic principle of double entry system, that is a double entry, it is bookkeeping is there are always two entries for every transaction. One entry will be credit entry, the one entry with the other entry will be the debit entry. So always we will be making in the T forms. Debit means what? Credit means what? Increase in an asset, decrease in asset. Increase in expenses, decrease in expenses. Decrease in liability means if it is an amount, it is owned. Increase in liability. Decrease in income, increase in income. Are you seeing? You are trying to... Clear?
Clear, ma'am.
Yes, ma'am.
Now, see. That I have given the question. One question. Now you tell me. Purchase of office stationery for cash. Means here, office stationery. Means what? Office stationery you are purchasing. So what you are getting?
1 second, ma'am.
Purchase of office stationery for cash.
Okay.
So I am purchasing the office stationery. So I am getting the furniture.
Furniture.
It is a stationery I am getting. Okay. In that, in other point, what I'm doing, I'm paying the cash.
Paying cash.
So I'm taking the product, I'm giving the cash. Means here, increase in the expenses, decrease in asset. Are you getting?
Yes, ma'am.
Next is a cash sales.
Ma'am, can you explain credit cash, how a credit cash is decrease in an asset?
Yeah, see here.
So buying a stationery and stationery will be an fixed capital, that means an asset itself, na?
But ma'am, here it counts in future, it is amount of asset amount is decreasing, ma'am, value.
So I am, see here, purchase, you are purchasing. So I am selling the good. Is it clear?
Okay.
I am selling the good.
Yes.
My business.
Yes.
So I am selling the good. So I am getting the expenses. In my pocket, expenses are increased.
You are shelling out from your pocket, ma'am.
This is my business.
Yes, yes.
You are purchasing. So I'll be writing in my books. No, you will not write. The purchaser will not write anything. This is my business, no?
Yes.
So I'll be writing in my books. So what I'll write? My asset has decreased. I sold the stationery to you. So asset has decreased.
Okay.
So you are paying me cash.
Yes.
What I'll write? My expenses has increased.
Correct. Expenses, your income is increased, ma'am. When I give you cash to you, your income is increased.
Income and expenses, no, ma'am. Payment I'm not doing.
No, I am making the payment to you. So the money coming to you, income is increased. Your income is increased.
Yes. That is an expense. What expenditure? My expenditure has increased.
Yes.
So stationery has decreased.
Okay.
That is a concept. Next, you see a cash sales. That is, what is entry? Cash account data to sales account. Sales. I'm doing the sales. Cash
Okay.
account, a cash sales. I'm not giving any credit to the customer. Debit. What I'm getting debit. Debit means here it is debit. Cash is a debit. Sales is a credit. So increase in a asset. Increase in a income. Both I'm getting. Cash sales. Immediately I'm increasing that. Both the things will be making a point.
Got it, ma'am. Got it.
And next is a credit sale. I'm not paying any cash. Just that is a receivable. Who is a person who is taking the goods that is in a credit, on a credit. If it is given any credit sales, means a particular person who is receivable is a person name you'll be writing. And a credit sales, that is RAM, XYZ account data to sales account. I'm not taking any cash here. I'm giving a credit. Means at present you are not paying any cash. Afterwards you will be paying. But that I'll not show. In that books I'll be writing that I'm going to get the amount. They are all the same. Because any of the customer will be paying amount to me back. Yes?
Yes. Yes.
Next, payment by a customer of an amount owning. That is a cash account data to receivable. Means here, customer of an owning amount, that is owning, means what he is getting. That is an increase in the asset, decrease in the asset. And next is a purchases on credit of goods for resale. Debit is a purchases, credit is a payable. That is increase in the liability, increase in the expenses. Means purchases is the name given to a purchaser for resale. Reselling it. See here. I forget to tell you, that's why you are getting the confusion. Debit, it is often, you will be making the display of T account. That is debit side means credit side. Increase in asset. When you are making in a debit side, that is asset, it is increasing. If it is in the credit side, that is any asset, then it is a decrease in asset. It is increasing, debit side it is there, increase in expenses, decrease in expenses. If it is an amount is owned, that is a liability is decreased, increase in the liability. Here, if you are starting a business with the cash, what you write? Cash account data to capital account. Is it clear? Yeah. Capital is nothing but it is a asset. Sorry. Capital is nothing but it is a liability. Is it? Debit, it is a cash. Decrease in liability, increase in liability. Cash account data to capital account. Yes.
Ma'am, can you explain once again?
Yes. So it depends upon this. See here.
Yes, ma'am.
Cash sales have given you.
Yes.
Cash account data to sales account. Sales. When it is coming on a sales, cash is coming on where? On a debit side.
Okay.
So that is an increase in asset.
Asset. Yeah.
See here. Increase in asset. When a sales is coming on a credit side, then decrease in asset. That is increase in income. See here. Decrease in income, increase in income. So it depends upon this you have to. But actually in exam, you'll not be writing, just you'll be making the journal entries. Any doubt, ma'am, Vijaya?
No, ma'am. No. Continue, ma'am. Got it.
Yesterday you are not there in the class?
I was there. I was there.
Yesterday you are there?
Yeah, in all the classes I was there. I
Huh?
attended all class. I attended all the class, ma'am.
Okay. Now you see, this is the questions. Start business with, this is a cash, that is with the cash. I have started a business.
Yes.
With the cash. So what the entry I'll be writing? Cash account data to capital account. Cash will be on the debit side. Capital will be on a credit side. So here cash is an asset.
Yes.
Capital is an liability.
Okay.
Asset plus liability. Is it equation? The first half showed the equation. See, yes. Capital plus liability is equals to asset. That is a business entity concept. Asset is equals to capital plus liability. Liability is equals to
Assets.
Assets plus assets minus capital.
Right.
So this is the questions. And goods sold on credit to Mr. AO. That is a AO account data to sales. Means why I am mentioning the name? In such a cases, when the goods are not sold on a cash, you have to mention the name. If you are selling the goods for the cash, you have to write the cash account data to sales account. If the credit is not mentioned, your goods sold on credit to Mr. A. So your credit is showing. So that's why you have to mention the name of a person. Are you getting my point?
Yes, ma'am.
Next, we paid creditor Mr. Olu by check. I have paid by check. When the name check comes means you have to mention that bank.
Okay.
Goods bought by check means I have purchased the goods, but I have not paid the cash. I have paid by check. Through check I have paid. So here I have bought means that is a purchases.
You purchased assets.
Purchase is asset.
Purchase is made in cash. So then we can write bank there.
No. Here, if it is a goods bought by cash, cash means if it is a cash is mentioned, you will be writing the cash. But here instead of cash, I have written that is a check. When is a check you see, that is a bank you have to write.
Okay. So when the payment is made in check, so that comes as a bank, isn't it, ma'am?
Yes.
Thank you.
Goods are sold for cash. So goods I have sold. It is not on credit. If it is a credit means you have to write the person name.
Okay.
So directly you are telling that it is a cash. So that is a cash account data to sales. Goods were returned to Mr. Kufur. Means he are returned. Means goods were returned. Yes. Means returned outward, not inward.
Okay.
Then bought a motor van by check. See here, I have bought the motor van by check. So what I have to write? Motor van account data to bank. Because I'm paid with the check.
Okay.
Okay. Paid further cash into the business. Paid further business. Means some more amount it is needed for your business. So additional payment you are making. So what the entry you'll be writing? Cash account data to capital account. When you start the business also same entry. If your additional capital also when you are introducing in your bank, At the time also, it is the same entry.
Okay.
Got my point?
Yes, ma'am.
I think now it is the time is up.
Yes, yes.
Any doubts now?
No, ma'am.
It's clear?
Yes, ma'am, clear. No words.
I think, Vijaya, you have joined very late.
Yes, ma'am.
Otherwise, it would be very interesting for my class because you'll be asking the questions. I'm ready to give the answer.
Okay, ma'am. Okay, ma'am. So nice of you. So sweet.
So I want students must be always asking the questions, asking to clear the doubts. Then I'll be thinking that, yes, my concept they have getting into.
Sure.
Yes.
So I want to make my class very intense, like everyone must be alert in my class. So now when you're asking the doubt how it is, so it's very good thing to me also to explain it twice. So some more 4 classes you have next week, and the next 10 classes, no? 8 classes. I want to see the Vijaya, Kalyan also asking the questions. But when other people also started asking you, so you'll also come with the answers, questions. So more preparation I have to do because the questions you're asking.
Okay.
Okay. See you, ma, next week. Yes, ma.
Your class was so interactive.
Thank you so much.
Thank you for clearing my doubts, ma'am. Thank you so much.
Okay. Okay. You are working anywhere, ma, Vijaya?
Yes, ma'am. I'm a lecturer.
Where?
In Meridian School, I teach 11th and 12th commerce students.
Okay. So, where it is the school?
School is in Banjara Hills, Hyderabad, ma'am.
What is the school name?
Meridian School. Meridian School.
Okay, okay. Meridian. Okay.
Meridian School, it has 11th and 12th. So
Okay.
11th.
So nice of you.
Science stream and the commerce. Yeah.
You are from science stream?
No, ma'am. I am from commerce.
Okay, okay. Good.
Thank you, ma'am.
So I'll wish you to come for the 13th and 14th, 15 classes.
Yes, ma'am. Definitely.
So UG.
Definitely.
Okay. So any doubts, ma?
No, ma'am. Thank you. Thank you for clearing all my doubts. Thank you so much, ma'am.
Okay. If anything is made any mistake, just you can also make. I'm ready to accept your answers also.
Thank you, ma'am. Thank you so much.
Okay. Okay. See you.